information on why I believe now is the absolute best time in our lifetimes to be buying real estate. The first couple of things I'll show you as a snapshot of what's going on. I call these the statistics you must know, but basically it shows our supply is down about 22% over previous year. Also shows that our pending year-to-date sales were up about 8%, and our number of closed sales year-to-date were up about 12%. The negative was that our median closed sale price year-to-date was down about 7%. So we still are seeing the effects, or through 2011 at least, we're still seeing the effects of more foreclosures in the sale as an overall percentage of the sales. This graph is what I call a heat map, which basically color coats what's happening as far as supply. So we have in green, it means that there's more than 6 months supply. In yellow, it means there's between 3 and 6 months supply, or in other words, a balanced market. And in red is less than 6 months, or less than 3 months supply, or in other words, a seller's market. So there's been a dramatic shift from last year to this year. You can see on the right-hand side, December 2011, starting mostly in the interior areas closer into Seattle, those areas are now under 3 months supply. So we're seeing multiple offers, we're seeing prices that have definitely stabilized, if not have started to already go up. My own personal experience is that in areas like Green Lake and North Seattle, our prices have risen probably about 4 or 5% at least over the last year or so. I had an opportunity to go to a great presentation the other day from a leading economist, Mark Bowd, who covers real estate in different areas of the country, about 13 different states. And he also covers Seattle, Bellevue, and Everett as one of his areas. And this is some of the information that he shared with me, which I wanted to pass on to you. I think it basically emphasizes what I just said about right now being the opportunity to buy residential real estate. You might find this interesting. This shows all of the sales that happened in 2006 as a market snapshot of the area. Most of the sales, as you can see, are in blue are the resales, so regular resales. In green is the new construction homes, and in red is foreclosures, and the yellow is foreclosure sales. So just to define those, foreclosures means when the bank actually forecloses on the home, so that's a transaction that takes place. Well, then when they put that back on the market, and sell that, that's a foreclosure sale. So that'll be interesting to know as we move through this information. This fast forwards to December 2007. As you can see, new construction is starting to go down, resales are starting to go down a little bit, and our foreclosures and foreclosure sales are just starting to happen. Interestingly, our prices went up, as you can see over here on this left side, from about $445,000 to $462,000, but our volume dropped off dramatically. Then if we go into the next year in 2008, again, less resales, less new construction, more foreclosures, more foreclosure sales. 2009, again, a little less resales, definitely a lot less new construction at 11%, and our foreclosures and foreclosure sales are just really exploding. So we're seeing that as about more than a total of a quarter of the entire market is now foreclosures and foreclosure sales. Going into 2010, again, the foreclosures are still expanding in foreclosure sales, and our new construction is going down to just about 9% of the market. In 2011, now this is where things start to change a little bit. As you can see, foreclosure sales for the first time in 2011 are now exceeding foreclosures. So this is one of the signs that recovery is starting to happen. So supply for total foreclosures is going down, which hopefully will continue to have a more positive impact on pricing, or at least taking the pressure off of the downward pressure on pricing. This graph shows the price per square foot and what happened with pricing over the last 3 years. On the left-hand side is just December 2011 compared to December 2010 and 2009. Our price per square foot going from $214 to $190. We didn't think we'd see that. And our prices going from $386,747 to $327,826. So in 2010, when we thought things were getting better, well, guess what? We had another hiccup and more foreclosures foreclosure sales happening than there were actual foreclosures. And in 2011, as a total, on the right-hand side, you can see the price per square foot fell 219.96 to 207.62. As far as our the distressed housing trends, as I mentioned, it's good that right now our foreclosure sales are exceeding our foreclosures, and that's going to be a continuing trend as we recover through this cycle. But we're still seeing significant foreclosures and foreclosure sales through about 2015, 2016. And then this is, again, another estimate of total distressed housing inventory. So this year, about 1,728 distressed homes projected, and that's going to continue to decline over the next 4 or 5 years. This is a graph of new construction starts, and as you can see, in 1993 they were higher than they are today. In 2011 we're projecting about 5686 total new construction starts, and we're going to gradually start to see that pick up, although not significantly, and this is going to have a real impact on prices in the future as we go into 2015, 2016. So very low supply as far as new construction. If we also pull in the job data, we're looking at job data is positive. We're going to continue to increase jobs in the area at a fairly decent clip. We're going to add about 31,000 in 2012, and that'll continue to grow a little bit through about 2015. But our job market is looking pretty good in this particular area, which is really helpful when it comes to housing. This is a look at mortgage interest rates historically since 1990. As we all know, interest rates are at an all-time low, but I think it's important to note that this is not a long-term type of a situation. I mean, this is an opportunity, is one of the pieces of the puzzle that show that this is an opportunity to buy at these historically low interest rates, and it has a significant impact on affordability. This graph shows the supply of housing versus the demand for housing, and as you can see, there's it's cycles as we go through the different years, but now we're into continued lack of demand for housing. So the buyer sentiment that I've been talking about out there, which is real stale, still buyers have not woken up to the fact that now is such an incredible time to buy, and when they do, it'll already probably be too late, because that's when prices will have definitely stabilized, have started to go up, and you'll have a lot less negotiating power than you do today, and selection. This graph shows how the different cycles show the housing market being overbuilt and underbuilt. So in the early 90s, we were overbuilt when I bought my first place, and then from 97 to about 2001, 2002, the housing market took off in Seattle. This is the stair step that a lot of people talk about in Seattle as far as prices go. Before this latest downturn, they've never really gone down significantly, but they had, basically had a stair step pattern to them, and it shows here in 2010 at the bottom. We were really overbuilt. We had people that didn't have enough money to buy these homes, and so that is starting to change now as we go into 2012 and 2013, 14, and 15, and this is why, one of the reasons why now is such a great time to buy. This graph is showing the affordability of homes, and really what you want to look at is the difference between the supportable median home price and the historical median home price. This gap here is the largest really that it's ever been. Right here you can see this was when we were overbuilt and when prices were really high versus income. We knew that they would not be sustainable, and that's represented here. But just as much as this was a significant deterrent for people buying homes, today there's an incredible opportunity, and it only exists because there's very little supply, very little demand. Supply and interest rates are so incredibly low. Again, this shows the overvaluation of properties, showing that in 2007, at the height of our market, how overvalued the Seattle market was. But just as overvalued as we were in 2007, we're even more undervalued today. And I think this particular graph is a great one to show why now is such a great time to buy. And then this is all the data behind those graphs. But as you can see, in 2012 and 2013, 14, 15, we're going to see continued increases in appreciation and values in the Seattle market. Again, a way to leverage money today into great investment opportunities and representing unique opportunities. So in summary and conclusion, the Seattle economy has experienced year-over-year job growth since November 2010, and the growth rate is increasing. Housing construction remains at an all-time low. Private builders can't get financing to build the homes. Housing affordability is at an all-time high. A severe overcorrection is already well established. Distressed housing inventory is high, but is now burning off faster than it is being created, which is good for prices. Marginal price appreciation will begin in year 2012 as economic growth becomes more stabilized and undervaluation is increasingly realized. Transactions have increased steadily during the past 24 months, but new home market share has declined mainly due to lack of supply. And market and price stability in 2012 will be driven by undervaluation as opposed to the impact of economic growth. Mature market demand will become a driving force in the next cycle. And what I mean by that is the 45 to 65-year-olds are going to be driving this next real estate cycle, and the demands for that are going to be different. People want smaller homes, they want more efficient homes, they want homes on fewer levels, fewer stairs, that kind of thing. And those are going to be some of the trends in at least new construction that we're going to see. But overall, I hope some of this information is interesting to you. If you have any questions or you want more information, you want a copy of this presentation, please send me an email, nateshort@windermere.com, or you can give me a call, 425-891-5842. I hope this information has been interesting. Thanks very much.